Yes. Hey, good morning. It's our time for weekly get together, discuss technical and fundamental analysis. It's been a pretty boring week. Nothing happened, but I guess we'll come up with something to talk about. My name is Wayne McDonell. Oh, wait. The Dow dropped 1,000 points on Monday. That's right. Yeah, all right, we'll talk about that. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows traders access to the Forex market, but also beautiful, wonderful, happy, good things like trading energies and metals and indices and binary options for scalping and hedging. It couldn't be any better. Xanadu. Shangri-La. Yeah, fun, fun, fun. Till the market takes your pips away, right? I do strategy sessions for Traders Way every single day for our clients. You're welcome to join us. And then, of course, every Friday here at FX Street. Just to review, I have a basic goal. And my basic goal for these webinars here at FX Street every Friday is to contribute at least 1,000 pips to your, trading account, I suppose, right? This year. Has anyone gotten closer? How many people would say how many pips do you think these webinars have contributed to your success so far this year? Anyone? Bastian, over 1,000. Adam, greatly. Anybody else? 200 for mid. Yeah, more. Right on. First 400 pips this week. Well, there you go. Well over 1,000 pips for nice. Andy, and all thanks to me. No, thanks to you, because here's the thing. I can give advice. I do have a decade's worth of trading experience, so I've made every mistake you'll ever make, and then some, because back in the days of the wild, wild west, there were mistakes that could be made that probably can't be made now. And back then you were fighting your broker just as much as you were fighting the other guy on the other side of your trade. So, the market is much more mature now and stable and all that kind of stuff. It's much better now. So now the only mistakes are, doing stupid things, buying at resistance and stuff. So anyways, yeah, Marina up 2,760 this month. High five, Marina. High five. So she's doing great. Yeah, 900 for Tim since attending. See, these are all good starts. So congratulations. So, what I was going to say is, sure, I can share my experience with you, but at the end of the day, you're going to be the one that it needs to make the changes, put in the hard work, and get through the frustration of going from mediocrity to greatness. And it's not an easy or quick trip. As soon as you got it all figured out, changes again, right? So it's a tough gig, but the ride never ends. I mean, it's a journey, and I hope you're excited to be part of it, because at times you're going to need that. It's constructive excitement. So anyways, congratulations to you, and I'm glad to see your hard work is paying off. That's all I'm trying to say. So we talked a lot about the markets this week. It starts with China devaluating, and then so on and so forth. Then the rest of Asia starts devaluating, which we had talked about, and then the big correction here in the United States. When I took the mic on Monday, we talked about what was happening. We discussed everything. The market hadn't crashed yet in the United States. We talked about it calmly, and we talked about how this is going to be a normal shift in portfolios, because we're in this transition of moving into a different central banking policy in the United States. And And some people were betting that was going to happen in September. They were 100% sure the Fed was going to raise interest rates in September. And now they're not so sure. It's definitely not 100%. So a lot of people had to get out of that trade that were front running it. And so they were short Euro USD because, well, that's the logical thing you should be doing. So they got to get out of that trade. But meanwhile, the longer term, institutional investors have to start readjusting their portfolios for the inevitable rate, whether it's October or December, doesn't really matter to an institutional investor. So, we're in this big, great transition. And, the volatility we get is really a function of this new efficiency that high-frequency trading offers our market. So, this isn't your dad or your grandpa's stock market anymore, but it is global macroeconomics mixed in with some microeconomics, mixed in with some portfolio management and risk management, and on top of that, some trading from the front runners. And you get this really crazy week, but my message was, it's not crazy. You need to be prepared. You shouldn't be chasing things. You shouldn't be emotional. Pick your spots. If you're a bull but the market's falling, mark your levels of support and get ready. Or if you're a bear but the market's rising, like Euro USD, mark your positions of resistance where you'd like to sell and then wait for reversal patterns there. There you go. So that's that. And it was a crazy day, but there were wonderful opportunities to be ready. So, let's take a look at Euro USD, for example. The Euro USD part, we had this giant move, and it was mostly traders getting out of the front run. Meaning they were 100% certain the Fed was going to raise interest rates in September, which is laughable, but that's what they thought. And they put money against it, and the Euro USD came down, 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 because everyone knows it's going to parity. Great. Once they found out that was incorrect, Euro USD goes up. And dramatically, right? And a whole bunch of people, asked me over and over and over again, Wayne, why is the euro so strong? Why is the euro so strong? Why is the euro strong? Well, the euro's not really strong relatively. What's happening is people are getting out of the dollar long trade. They realize they're in too early. They're out of position. And they simply need to get out of that. And, that's one reason why we review the Commitment of Traders report every Monday. Right? How many people like reviewing the Commitment of Traders report every Monday? And what it showed is the market was dramatically short Euro USD. Cool. Well, they were in early. So the opposite of being short Euro USD is long, and that's how you get out of a short trade. And what that does is spook some other traders out, which then spooks some, which then hits some stop losses, which then spooks some other guys out, and then hits some more stop losses, and up, 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 up. Then the giant spike that we had in here, kind of thing, and then what? Then we hit the 382% retracement. And this is after, the Dow is crashing 1,000 pips, and it's the end of the world, and, there's blood in the streets. There's blood in the streets. Well, what did we talk about when it came to blood in the streets? Right? We talked about the buying opportunity, that when there's blood in the street, you need to have cash. Cash is king. You need to be calm and focused, not just on the short term, like, what's happening right this second? Oh my God, it's moving 25 pips again. Blah, 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 blah. No, focused on the long term. What's the fundamental trend? Has anything changed? Is the ECB suddenly dumping quantitative easing? Even though they told us they would do quantitative easing until 2017. Did they stop? No. Is the Fed going to raise interest rates? Yes, but not today or tomorrow. Probably not September, but maybe. Much more likely October, but potentially not. But certainly by December, absolutely guaranteed. Why? They told us so. So has anything changed? What was any of this an opportunity to freak out? Well, yeah, if you're dumb money, right? So how do you trade this is probably the next question, right? Pick your lines. Where's the support? Where's the resistance? If you were a bear, what would you do? So you find your resistance, because if you're a bear, all you can do is sell. Now, be granted, I was a bear, and I traded this with the crew on Monday. In fact, I did a special event on Monday where we traded the stock market open. How many people traded that with me? We actually listened to the trading floor of the S&P 500. We called out 33 as being the limit lockdown. We listened to the floor traders, traded all the way down to limit lock, then we cheered because we hit the bottom and the entire stock market reversed. We did it second by second in real time. We cheered. Yeah, we did it. And the entire market turned. Lovely, tell your mum. And then we watched the movie. It was great. So all I'm trying to say is, stay calm, trade on kind of thing. Have a plan. Be focused. Don't freak out. I gave everyone a challenge. I said, trade it like you are a professional. Like, treat these hours and days like you are the trader that you want to become someday. And would that trader be freaking out and chasing price? And no, of course not. So inevitably, what happens in the smaller time frame to put in the trade? Well, we hit the 382 as you see here, which is the macro 382. And guess what? It heads down. Do you sell this red candle? Remember, it was giant green at one point. Do you sell that? Not on a 4-hour, right? No. Although, if you're on a 15-minute, there probably could have been a trade, but it would have been here. That would have been the trade on the small time frame, right? Okay? But I don't recommend that. The second opportunity would be the 5A cross down, in particular after the 1, 2, 3. Just remember, it'd be a 1, 2, 3 on an hourly chart, right? But even then, that's aggressive because of the massive moves. And you'll probably recall there was a buying opportunity in there if you were a bull. So that's still not the one I would recommend. But now we go like a whole day now, and we print a nice big giant low. Okay? Remember, the moving average wasn't there yet because it's lagging. So what's the trade then? The trade is this: down, up. And that's why this area here is marked in purple or gray, whatever that is. Okay? And what we're looking for is a continuation pattern down. Okay? And again, this is a 4-hour chart, so it's slow as molasses on a cold Georgia morning. It'd be even better on an hourly. I'm just trying to give you the basics. That I think the best trade here is not the aggressive one here, not an aggressive one here, not an aggressive one here, but the conservative one here. Okay? Because so much more time has gone by. Okay, and we're looking for the down, 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 up, up, sell thing. Okay, and what's the difference if you sold here? You notice it's like the same price as almost all of these things. I mean, relatively speaking, the difference between pips, right? The difference between the pips here or here or here is like really either nothing or almost nothing. Wouldn't you agree? So, all right. So you might trade less, but you'd make the same amount of pips and you would be taking less risk. Less risk, same reward. And when you're talking to a client, they want risk-adjusted performance. They want to see things like, yes, you're profitable, so this is your profit now. Okay? That's your profit margin, but your risk is lower. Okay? And that is the key, as Andy says. Absolutely. And of course, we had all that marked out ahead of time. All right. And then you'll see there's little micro trades in here now. By micro, I mean like hourly chart, right? Let's zoom out. Right? Taking it the other way, or the same sort of pattern. See the lower low here? Lower high, roll reversal, sell. Lower low, take the old support, should become resistance in the future, and it did. Down, lower low, take the old support, bring it across to the future, right? Lower low. This you shouldn't have dragged over because all of this was previous analysis. And this one failed, huh? So be cautious now. What? Now, going back to this other thing we covered on the 4-hour chart, you can see it's much easier on the hourly chart, which you're probably watching anyways, right? So here we have key support, congestion, right? You see this? But it makes a lower low. So what do? You take old support, just like we did on these other time frames. Old support, you drag it across, should be resistance in the future. And that's where you should sell, okay? Lower low, drag across, right? Lower high. Lower low, drag across, lower high. Lower low, drag across, lower high. Lower low, drag across. Uh-oh. And now we're consolidating. So now you got to go from trend to consolidation. What do you think, guys? Is that helpful? The same pattern occurred over and over and over and over on the upside. So here's the thing. Even though I'm a bear, and we set all of this up, and I talk about being a bear on this pair daily over and over and over again, the question is, do you make any money on the upside? Well, those that traded with me on Monday saw that I had, 450 pips that day? Long Euro USD. So I was up here, and then we set up the consolidation. Then as soon as you get the lower low, lower high, that's your aha moment. Okay? If you're already a bear. Where people get confused, they're like, well, Wayne, how did you know it was going to reverse it? Well, I wouldn't. How would I? They'll be silly rabbit. You're just ignorant. That's my Michael Jackson impersonation. No, of course I wouldn't. What do I have, a crystal ball? Don't be redonkulous. But what was the message? If you are a bear, when the market is moving up. Now, the velocity on this one was dramatic because of macroeconomics, But the message is still the same. If you're a bear and the market's moving up, find 2 or 3 levels of resistance, wait for price to get up there. You don't have to be long, just wait. You can do that for me, right? And then when price does get there, your plan is to wait for reversal patterns. And then when you get the reversal pattern, trade the reversal. Not before the fact, after the fact. Because it's a high-risk trade to sell a market that's moving like a rocket ship. Capiche? Sir, yes, sir. Hey, you have some more pips, sir. So anyways, very, very interesting, very, very interesting week, fundamentally and technically. Now, it was completely shocking and unbelievable that the third week of August all this went down, right? Who would have thought the third week of August would be important to the entire global financial system? What an unpredictable, shocking thing, right? Oh, wait, we talked about this at least 6 months ago. How many people here, when I talked about the fundamentals of everything, how many people here knew, like I must have told you at least 12 times, maybe 25 times, maybe 100 times, that the third week of August, you need to be home, you need to be out of vacation, you need to I actually said, tell your friends to go away and leave you alone for a while on the third week of August because you're going to be ready. How many people would agree that all of that was so unbelievably clear? 2 months ago, 3 months ago, 6 months ago, 9 months ago, it wouldn't be any difference. Isn't that interesting? He became allergic to it. And look what happened. Monday was the third week of August, just redonkulous. How interesting. The Chinese devaluation came last week, and people were... So I said, all right, if you were a Forex hedge fund manager, you would short all Asian currencies now. Right? Isn't that interesting? That was when China devalued and shocked the world. And, we knew they needed to do something, but, a flat-out devaluation, I think, is a good thing. I think they should back them out from the peg. So anyways, we talked about that being a good thing. And I said, all right, so how do you make money on this? And everyone's like, actually, I don't know, Wayne. I said, well, it's very similar. You got to think about the cause and effect. In the United States... there was a scare, I don't know, 3 months ago. Chickens that lay eggs, not chickens for meat, but chickens that just lay eggs. There was some sort of bird flu or something, right? And they were going to have to kill millions of these birds to protect the supply, right? And I actually sat down with my wife and children in our backyard. We had a little picnic. And we discussed as a family how to make money on the situation. I said, somebody's going to lose because the price of eggs could skyrocket, and somebody possibly can win because the price of eggs could possibly skyrocket. Who's going to win? Who's going to lose? How do we make money? That's what I discuss with my children, and they're 7 and 8. No, sorry, they're 8 and 9. Right? I discussed last week as well what happens when a hurricane leaves Africa and starts heading toward the Caribbean. How do you make money? Isn't that interesting? Cause and effect. And depending on the angle and velocity of the hurricane, you can decide whether you want to buy Home Depot stock, buy frozen concentrated orange juice futures, right? Or get into some oil, right? Cause and effect. So China devalues. We can discuss why, very clearly why. And then how does this going to impact global macroeconomics? Who's going to lose? So I said, well, if you were a professional Forex manager, just sell all Asian currencies. Everything. Anyone that competes with China, sell it. And some of those currencies just crashed. I think within 24 hours of me saying that, even Kazakhstan dropped by 30%. Oy vey! But most of those guys, you got the poor Kazakhs, and then you got the rich Russians. They're already hurting, and then you got the Texans. I was in Texas at a wedding. All the normal people come in, and then all of a sudden, these beautiful people with fabulous clothes and fabulous suntans, they walk in. I'm like, oh, and his wife was just like most beautiful woman in the room, more beautiful than the bride, right? I'm like, who the hell are these guys? I'm in Texas. I'm like, who the hell are these guys? So I go over there. I'm like, hey, I'm Wayne. What's your name? So what do you do? Right? I say to the guy, you're like glowing. Did you just like? So what do you do? Oil. I'm like, yeah, all right. So oil. I'm in Texas. You clearly got some money, so that's good. So you what? We're in Austin. There's no oil in Austin. He's like, no, Kazakhstan. Yeah, Jeffrey knows, right? I'm like, Kazakhstan? What is it, a Mexican from Texas doing in Kazakhstan? Well, apparently getting filthy, stinking rich. And I don't think he spends much time drilling oil. I think he spends a lot of time counting money. But anyways, cause and effect, cause and effect, cause and effect, cause and effect, cause and effect. And that's your ability to think ahead is really what's going to make you a professional. Now, you can stay retail your whole life and just trade the next 5A cross. Trade the next 5A cross. There's a pivot point. I think I'll grab that for 20 pips. You can do that all, for the rest of your life. But institutional investors have more going on. So, and if you think about it, and again, I sit down with my 8 and 9-year-old children, and we ask some basic questions. Okay, here's what's happening. What could the consequences be? And what should our actions be? They don't teach that in school. They don't teach that at Boy Scouts or Girl Scouts. So it's gonna have to be dear old dad. I wish someone talked to me like that when I was 9. Son, daughter, there's bird flu in Iowa. How do we get filthy, stinking rich? Holy moly. If only, huh? So, speaking about that, so the last 2 weeks, fundamentals have been really key. When was the last time I ever sold you something in this webinar? When have I ever pitched you like, hey, you should buy this, you should buy that, you should come to my thing? Never, right? Yeah. I'm going to sell you something if it's okay. I was asked by lots of people to put a serious course together on fundamental analysis. I mean, hardcore fundies. What does it all mean, Basel? From, all the way through, right? From what is money to what is banking, how is money created, what is central banking, what do central banks do, how are they run, so on and so forth, all the way around. So I did it. Okay? So there it is. Training.fxbootcamp.com. Okay? It's up. Training. I said I'd charge $1,000. I said that was probably cheap compared, it's cheaper than my Harvard education. A lot of the stuff I learned was from Harvard. But then I contacted Traders Way since I work with them. And I pitched it to them. I said, look, I meet with people every day to talk about technicals and fundamentals. They're becoming better traders. They're becoming more confident, and they're opening live accounts. Right? Everything's good. And I said, this is what they're also asking for, 20 to 30 hours of training on fundamental analysis. But it's expensive because it takes so much time and effort. So will you chip in? So they said anyone, so it's $1,000, guys. 30 hours or something it'll be, right? Okay, so there it is, $997. But they said, look, so it's $1,000. They said, all right, if they pay $500 for the training course and put the other $500 at a live account, then that'll work too. You get it? So instead of paying $1,000 for the course, you put $500 at Traders Way. They'll give you a coupon code that drops the price by $500. So now right? So why throw $500 away when you can trade the other $500? Okay? You get it? So you can pay me $1,000 if you want, or you can put $500 at Traders Way and get a $500 coupon. Yeah, even if you have, Wyatt, even if you have more than $500 now, I'm cool with it. All you do is contact tradersway.com, right? Just send them an email. Say, hi, my name is Wyatt. I got myself more than $500 in my account. I need a coupon code. And they'll give you a coupon code. It won't be available at the end of September. I guess I should say this. There's only 25 coupons. And I think once those are shut down, I think I'll shut the whole website down. So this isn't this is just something you guys asked for. So anyways, let me just show you what it looks like, and then I'm done. All right, so tons and tons and tons of lessons. Right now, they're not all up there. I think it goes to about here. So there's about 15 hours of videos already. So when you click on it, you get a nice, beautiful video. Right, nice, easy to see. Right? See, nice, easy to see. Here's the progress. Here are all the lessons. I've completed 1 out of 15 steps. Right, so it's tracking everything. You can go to the next lesson after it's completed. Very, very nice, right? I think it's pretty. So you can see here I'm done lesson 1, and lesson 2 is now available. Cool. So, yeah, I don't know. Yeah. So that's it. So, pan on fire. Yeah, just open an account at Traders Way, pop in $500, and then contact support and ask for a coupon code. All right, so that's it. If you have more questions, ask me, but it's going to be about 24 hours of training videos about fundamental analysis. You'll actually be able to run a commercial bank by the time you're done this. All right. Consider it a cheap Harvard education. All right, so let's move on.com. You asked for it. I gave you it. I'm done. Okay, let's talk about S&P 500. All right, so there's our bottom. Nice. So the interesting thing about the stock market, and this is, I guess, a fundamental point of view, the stock market is designed to go up. Very, very few people make money on the way down. There are some that are short-term sort of entering the market, and then most are actually very long-term. And short-term isn't necessarily just trading. So one way portfolio management works is that you have these various rules, these risk rules set in place to protect your investor or the performance of the portfolio. And one of the things you might say is you can't own more than 5% of any one stock, let's say. So, let you own 20 stocks and each are 5%. Now, each individual stock costs different prices, right? So you can only hold X number of shares of stock A and X number of shares in stock B, but it all works out to about to 100%, right? Of course, you'll have some dry powder laying around, so maybe you only have 18 stocks, right? But you have this balanced portfolio based on risk. Now, what happens if one of the stocks go up 25% and another one goes down? Well, you're going to have to sell some of your best performing stock because now because of the increase in price, now you're holding more than 5% of it. So now you got to scale some of that down, and then you probably want to dump the one that's underperforming completely to find a better investment, right? So you're always rebalancing your portfolio. This is a normal function of business, of managers, of portfolio managers. They all do it, every one of them. So a lot of this change in policy at the Fed, whenever it happens, is going to change a lot of these portfolios. And even on the short term, you get these big drops. But there might have been, so you just imagine Apple, right? Apple shares falling during this period because it's a systemic drop, right? All shares dropped. Well, a lot of traders that were at the top, maybe they bought high, or the trader might have been in the trade for a long time. Either way, some of the Apple investors got out up here for profit or for loss. It doesn't even really matter. But there are others that are sitting around the table. And this is what I talked about on Monday. There's a conference table at a hedge fund, and they get all their managers around, and there's a senior guy in charge. He's the one with the top hat on. Let me draw the top hat. Okay, there's the senior guy. Okay, and he says, "All right, team, where's our dry powder?" What, right? And that means you take all the money. So you either liquidated some of the things, and you have money in reserve for future investments. You say, "All right, we're going to buy the dip. What can we buy as this market drops? What do we want to buy that we maybe didn't buy before because it was too expensive?" And they start, they should already actually have a list of the 3 or 4 or 5, things they want to buy in this crash. They pick their price, they pick their line, and they start buying. And all it does is, it could even be some of these guys taking profit and then buying back in on the dip. But the point is that they were ready. They were ready, they were willing, they're able. This is a normal conversation, just like I was saying to you, hey, bird flu, what do we do? Who's going to win, who's going to lose? What do we do? Right? Within 1 minute of an earthquake in Japan being announced, let's say a major earthquake in Japan, if there was one announced right now, within 1 minute, investors around the world will be selling some Japanese stocks and buying others. So, for example, I believe if something horrible like that was announced, within 1 minute, large construction companies in Japan their stocks will probably jump about 50% within 1 minute. Because there are people ready. You understand? There are people ready. And in the stock market, more people make money on the way up than down. So you'll see situations where they pick their lines and they're ready to buy. Only because price is low, which is different than Forex, isn't it? In Forex, you just keep selling. Just sell, sell, sell. But in this case, no. People will buy the stock market only because it's down 5%, only because it's down 10%, only because it's down 38.2%. Like I said, Andy, if a hurricane comes off the coast of Africa, do I still have that business card thing up? No. Yeah, if a hurricane comes off the coast of Africa, and it's on the high side of the equator, and not just the equator, but it's just a little north of sort of the normal path, and it starts coming into the Caribbean islands, the Caribbean islands will push the hurricane up a little bit to the north. The land masses will actually push it to the north a little bit, which means it'll come on the high side of the Caribbean and would much more likely impact Florida than if it came in low. Therefore, what's the consequences if Florida is hit by a hurricane? Well, we all know, but let's go over them. You buy like Home Depot because people have to go out and start buying things like lumber and nails because they need to board up their windows and stuff, right? And then after, if there is damage, they're going to have to fix their roofs and fix their gutters and fix their windows and, all that kind of stuff, right? So, for example, generators will sell out immediately. Plywood will just sell out immediately at every Home Depot and Lowe's in Florida, right? That kind of thing. If the orange crop might be threatened, frozen concentrated orange juice futures, okay? But here's the trick. You should know before CNN is reporting it. Because if you're in the trade and then you get the guy standing out on the beach and he's like, it's so windy. This is going to be the worst storm in the whole world. It could be the end of the world as we know. Right. They always make a big deal out of it. Meanwhile, there's just a guy with a fan behind him. They're trying to make the storm. It doesn't even have to be a real storm, guys. As long as CNN and the Weather Channel report it, prices are going to go up. So the trick is you just have to be a little smarter than the idiots at CNN. And by the way, it's not that difficult. Because they get their information from the government. The government reports it. You have access to the same data. You just have to be on the trade before everybody else. Gold and silver speculation manipulation. I'm not going to get into that because I think gold is probably one of the worst things that you should be focused on now. I haven't wanted to talk about gold for 2 years, maybe 3 years. Gold is probably the most boring trade you could possibly be on now. Nobody wants to talk about gold. except people ask me about it all the time. Investors want yield, not gold. Oil. All right, well, let's go through some things then, okay? Yeah, we'll go over the oil. So I have it doing a 1, 2, 3. I thought it might do a double bottom, but it just did the 1, 2, 3 and never looked back. I got us down to 40, right? I think our actual line was 42. We shorted at 62. I prepared people 2 or 3 months in advance to short at 62. Can anybody confirm that? That at least 8 weeks in advance, we were prepared to sell at 62. In fact, I talked about it in December. Now, we shorted it in May, but we talked about it in December. Okay. So it fell from 62, and my line, as you can see, is 42. Why? Because it's there. I don't make these things up. It's not my line. It's just that's where the market bottomed out before, so I figured it would be a bottom. Now, technical analysis, Fibonacci, Leonardo Fibonacci, he says oil is going to go down to 14. And I've been clear, as soon as we breach this $40 a barrel level, really it's $42 a barrel. Once we got lower than that, I admitted to everybody I have no idea what it's going to do next. But I don't think it's going to go that far down. It could, of course. But I just find it hard to believe, but it certainly could. So I was clear in here, I don't know. All right? But we did witness this. Okay? And I think we were here. So this was yesterday. So my analysis at that time was, all right, this is an important thing because we have the higher high, higher low scenario. Okay? So I think it'll do this, hit the 55. Because the 55 is in control, we'll come down, perhaps we'll double bottom off support, and then work our way back up. That was the conservative trade, right? What we ended up doing is just blowing right through the 55 and, off we go. Is this the bottom of the market? It could be. Okay? And it took all that crazy volatility, but I kind of look at this as potentially an overshoot where the market just freaked out a little too much. But logically, this is my old area that that we did months and months ago. We had this picked out at 42, and for inevitable rise back into here. And then what I was saying is we would be stuck between 75 and 55 probably for the next 3 years. Okay? So I am looking, sometimes I'm looking 1 day, right? Or 1 week, or 1 month, and sometimes, 1+ years ahead. This market is bearish, technically. And if you're a bear on this market, you'd sell. And that your aggressive line for selling is in here. Okay? You understand? This is old support, so it's now resistance. And we're on the daily 21, which is a dynamic level of resistance. If you were a bear, you'd be very interested in today. Okay? You're a little late. It's already gone. You're always chasing price. Da, 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 da. I'm cold and ashamed, lying naked on the floor. Right? Losing trades never change into something real. All right, so if you're a bear, that price action is bearish, right? Well, Andy, who says that? Oh, Jimmy says short squeeze going. Well, there's different things going on, obviously. There's traders versus investors and all that kind of stuff. And then, of course, there's hedgers. And I don't know, oil is complicated where there's no reason for it to go up. But oil is low enough where it's helpful to those that need low oil prices. it's painful right now to those that need high oil prices, but any lower, I don't think does anybody any good. There is a problem of too low oil prices. So, but these things need to work out, right? A lot of these markets are not instantaneous markets. I mean, there's only so much oil, right? But right now, there's way too much oil, not quite enough demand. So eventually, they'll stop producing as much oil, and eventually, we'll start, consuming some of that oil and drawing down some of those reserves, and the market starts to stabilize. But just like reverse the whole situation. Do you remember when oil was $200 a barrel and everybody was freaking out, and we were talking about it's the end of the world as far as we know it? We've hit peak oil. We're all doomed. It's all over. Prices are going to go to $1,000 a barrel. Remember all that stupid stuff? What a dumb thing. So what happened? Entrepreneurs started saying, well, we need to find a way. At $200 a barrel, we need to find a way to get some oil. Okay? So what they do is they make investments, they buy more rigs, they put more money into exploration. But more importantly, what happens is that's not enough, because that's old school, right? And there's only so many rigs, and there's only so many exploration companies, and pretty soon you're like, well, where conventional oil is, there's already people, right? So eventually someone comes along and says, you know what? The way to get the oil is to do things in an unconventional manner. We need a new technology. We need to invest into R&D, not just exploration. And, lo and behold, the output becomes fracking. And now we have a completely different market. Completely different market. And so all of a sudden, we have so much oil, it's unbelievable. And all of a sudden, there's like a dot-com party on venture capital cash, right? Remember those idiots that ruined the dot-com days? All of a sudden, it was like oil everywhere, oil, and they're just making money hand over fist, but they're overproducing. And all of a sudden, there's too much oil, and prices come down, and they killed their own party. Right? But all of a sudden, like, well, the party's over. Yeah, well, you killed it. So we need to deal with this new reality, this new technology, and all that kind of stuff. And there's no quick answer on this one. And we're going to have low oil prices for a long time, and we need to adjust for that. So you could short this for a while, and other people will long it. So it just depends where you are and who you are in the market. Okay? So I think if you're a bear, you'd be selling this hard right now. That's all. And if you're a bull, just ask yourself the basic question, where's support? And get ready for a reversal pattern. Plan it out now. Yeah, so I'm bummed out about the whole oil thing because humans are not going to change, and we're going to continue burning fossil fuels for the next 100 years. Oh, well, we almost made the big change. So I compare it to like the worst invention in the world. The worst invention in the history of mankind was the $1,000 car in India by Tata Motors. They made the Nano. That is the worst invention. Second worst is probably the nuclear bomb, except the Nano is the $1,000 car is going to destroy the Earth. A nuclear bomb probably won't. So, uh-oh. Did I make a few people mad? I'm just saying, India doesn't need another billion cars on the road, especially cheap ones. The only thing I can think of is in 100 years, traffic will be impossible. There'd just be so many cars on the road all over the world that you just won't be able to drive anymore. And cars will turn from a product to a service. And when you go to work, I was talking about this with my son actually last night. We were going to a Boy Scout meeting. And I said, hey, you know what? Because we're kind of slow in traffic and stuff, right? And I said, when you drive to work in your car, because that's why most people have cars. You drive to work, you get to the office. What do you do with your car all day? What does it do? It sits there. Good. So you work all day, put in your 9 or 10 hours. Then you head down, you jump in your car, you drive home, and then you park it in the driveway. What does it do there? Well, it sits there for 8 or 9, 10 hours. And yet cars hold, 5 or 6 people, yet we all drive them one person at a time. So the cars are too big, and we don't use them most of the time. And they're very costly. You got to insure them, you got to maintain them, you got to gas them. And you got to pay too much money anyways. I said, so one day you'll just call, and a car will show up, and it'll be run by a robot, and you'll just get in and say, take me to work. It'll take you to work, and then it'll pick up the next person right there, and we'll just have these autonomous cars that just drive people around, and it'll be a service. Be like hailing a cab, except there's no one driving it. And you just won't think anything of it. Take me to work. Take us Boy Scouts. And efficiency will improve, and probably safety. So that's where the world's going, I think. So I don't know how we get into this stuff. USD CAD. So here's our plan. I think you can figure it out. Okay. I thought up, but I didn't get the up. You see that? It did go up, but not as high as I wanted. Then I wanted it down off of this and then up. Well, we didn't get the up. So it came down, went off the lower level support, and then it went up. So it's sort of the velocity of it. Yeah, Tim, did you use a coupon code? Good. Well, thank you for being a client of Trader's Way. Now, double that $500, huh? Did you have any troubles with the forms or anything like that? It's a new site, so. Was it all straightforward, everything good, and all that? No, all went smooth. Nice. So you can start the videos. Tim's going to learn what the difference between money and wealth. Does anyone know the oldest documentation of money? What culture used money as far as history is concerned? Where was money used the very first time? Where you go from just pure barter to actual money. Babylon's close. Anyone hear of the Sumerians? A culture called a country or culture called Sumar. The Sumerians, Sumar. They actually used money as a medium of exchange. And then what happened? people started counting their money because it mattered. Everyone had the same unit of exchange, right? Let's say it was a piece of gold. It could be anything, but let's say it was a piece of gold. Well, suddenly, like, I know what a goat costs, but I make tables. So I'm like, well, I want to buy a goat. Do you need a table? And the guy's like, no, I don't need a table. So that's where the market was very inefficient. So they came up with gold as money. Well, this goat cost one piece of gold. That table costs 5 pieces of gold. Fine. So now they can just trade the gold. Then the next thing that was invented because of that, people wanted to know how much gold they had. So accounting was invented, unit of account. So suddenly people were counting how many units of gold they had because gold was now money. And then what? People started to be worried. They accounted for so much gold. He's like, man, I got a lot of gold, but it's sitting there in my closet. It's under my bed. Someone's going to come in and steal my gold. So then what was invented? Banks. So all of a sudden banks are being held, holding all this gold. And they say, well, I need a record of how much gold is in the bank. Gives them a bank note. So this is what Tim's going to learn today. So then what does that create? Why trade the gold when because everyone's lazy. Why go to the bank and get the gold to trade it? Why don't I just trade you my piece of paper, my bank note? And then what does the banker figure out? Nobody's actually coming from their gold. They're just swapping these pieces of paper. Nobody actually knows how much gold I'm holding. Why don't I lend that gold out? Oh, snap. You see? So it all started with the Sumerians. Now, the first record of truly paper money is in Chengdu, China. You know what they call me in Chengdu? Mr. Beverly Hills. True story. Yeah, I actually flew myself way out to Chengdu, China with the pandas, but I didn't see no pandas. But I did have lunch with the governor of the Sichuan province and the mayor of Chengdu. But I didn't see no pandas. So anyway, so that's there's the history of money in a nutshell. How interesting, right? Sumerians, yeah, probably. Yeah, Jimmy. All right, so yeah, we're in this uptrend, and do you see how I have it all lined up? If this is trending, we're looking like, and this is a price action play, right? You see it's the higher high, higher low, off the roll reversal, up. I've done this for you today on 4-hour charts, 1-hour charts, 15-minute charts. I could do this on 5-minute charts. It's going to be the same. This is a daily chart. It seems like we could be in a supportive area for the USD CAD. So anyways, Tim, I hope you get your $500 worth. Oh, okay, so let's do that. Oh, I got a private message. Hillman, if you could, post your messages publicly? All right, so let's talk. I got a question about gold. Like, why doesn't anybody care about gold? And then, of course, as soon as I say that, someone's going to say, well, I totally care about gold. Let's talk about gold. Let's talk about gold, baby. Let's talk about you and me. All right, why do people invest into gold? We know there's uses for gold. Gold is used for jewelry. Gold is used for electronics. Gold is used for dentistry. Japan is one of the largest purchasers of gold in the world, and it's specifically for dentistry. Oh, Lewis got 75 on that USD CAD trade. Hey, you're welcome. So sign up for the training course, dude. Spend the money wisely. Yeah, okay, so gold isn't used as money as now. So one of the things Tim's going to learn is the difference between M1, M2, and M3 money supply. Oh, snap. Yeah, I told you, Tim, it's a college level course. So when the Fed is talking about money supply, he'll say, well, which money supply? Gold is not money anymore. Gold is close to money. It's quite liquid. But let me ask you something. If you went to the grocery store right now with a bar of gold, an ingot of gold, and you say, I'd like to buy a dozen eggs, a gallon of milk, and a loaf of bread. Here's my gold ingot. What? Are they going to accept it? No. So don't tell me it's money. So it needs to be converted to money. And it's quite liquid, but it's not completely liquid. Okay? So anyways, so why do you own gold as a long-term investment? Well, you're going to own it in case money becomes worthless. And another way of identifying that is inflation, where a dollar just doesn't even buy you anything anymore. Right? When a loaf of bread, now a loaf of bread is like $3. What, right? Holy smokes. So when a loaf of bread is $20, you know you got a problem, right? So to hedge the falling purchasing power of your currency so that it's convertible into other things as a store of value, you would buy gold. Because money is also a store of value, isn't it? So like you're a table guy, you make tables. So you sell your whole inventory, you sell 10 tables, and now you have a stack of money, and you can go spend it today or tomorrow or next month. You're like, well, I'm going to save this. It's a store of value. But what if, as it's sitting there, the store of value, the things you want to buy next month, those prices are going up and up and up. Your stack of money is not getting any more valuable. It's getting less valuable. So you need to convert to something that's not losing its purchasing power, and very often that's going to be gold in times of financial crisis. Okay, typically also in a time of financial crisis, you buy a hard asset. So gold is a hard asset, but also like real estate. Okay, so you want to buy like a house, it's there, or you want to buy commercial real estate like a building. Now, the last financial crisis was in of itself a real estate problem. So even more difficult, right? But that's why gold went to 2,000, because there really wasn't something else to buy. But in a time of crisis, and you can write this down, next time there's a global financial crisis, get out of things like stocks and buy gold in that situation. But we're not in that situation, and we're a long ways from it. The second part, right, so that's the hedge, if you will. But what's making the world work right now, and this is, again, the fundamentals, right? This is why I put this whole training course together. The way that the money flows around the world is specifically related to yield. Okay? As a Forex trader, we're actually bond traders. Our market is affected by bonds. If you worked at a bank as a currency trader, you are in the fixed income department. Did you guys know that? The currency department at a bank does like foreign exchange transactions. It's transactional. You're doing wires. But you're not like trading. If you're a Forex trader at a bank, you're in fixed income. Bonds. You're a bond trader. But to buy foreign bonds, you need to convert currencies. And that's how that all works out. So the reason money changes value is because it crosses a border. It crosses a border to do a business transaction, like building a factory. It'll cross a border for let's say, a commodity transaction. So Japan buys oil from Indonesia, but the whole thing's priced in dollars. So lots of currency conversion there. But a huge part of it is money flowing to a country for the purchase of that country's debt. Basically, you're loaning money to New Zealand if you're going to buy a New Zealand bond. In exchange for that, New Zealand would say to you, we will pay your money back in a certain amount of time. Like in 5 years, we will pay all your money back, all of it. Plus, we're going to pay you interest on top of it. Obviously. And money flows around based on changes in these interest rates. Changes in interest rates are affected by things like change in risk or perceived risk. Okay? So on and so forth. And money wants to go where the yield is, because you're not earning money in a bank account. Like in Japan, you have your life savings in a bank account. What does the Japanese housewife do to protect the purchasing power of her obviously devalued yen? Remember, the yen was 80. Now it's 125. So it's losing money. Sitting in the bank, it's losing money. It's bleeding value. So what do? What does the Japanese housewife do? You purchase a foreign bond that pays an interest rate higher than the inflation rate. You guys following me? You're a bond trader. You're a bond trader. You're a bond trader. You're a bond trader. You are in fixed income, Mr. or Miss Currency Trader. And as the Japanese housewife says, my yen, my life savings is losing purchasing power. I'm receiving real negative interest rates. Right? As she decides to buy or put her money into a foreign bond fund, When that foreign bond fund then goes out and buys foreign bonds, then what's happening is a giant currency transaction, because if they buy 1 billion yen worth of Aussie dollar, they need to convert their yen to the dollar, to the Aussie dollar. Japanese yen weakens, Aussie dollar goes up, for example. So according to the charts, what are the Japanese buying? Apparently they're buying US dollars. According to this chart, the Euro USD, what have the Europeans been buying? Apparently USD. So anyways, I think we're out of time. So for a lousy $500, you can get 24 hours worth of training videos on fundamentals. If this stuff is interesting to you, sign up. Oops, that went to the presenter. That's it. I don't want to make a big sales pitch. That's it. But I'm here for you all the time. I'm glad you guys are finding success. Some of you are finding a lot of success. So I've always said, I'll do whatever it takes, whatever you need just ask me. So this training was asked for, so I created it for you. Is that Tim? Oh, there's Tim. Look at that, Tim. Timorama. There's Tim. Cool. So anyways, you asked for it. I made it. You should sign up for it, because I only did it because you asked. That's it. Peace on earth. May the pips be with you. May your profits be above average.